Hi everyone, welcome to Money Compass Month 2. Today we are very honored to have a special guest with us. He is none other than Mr. Shan Saeed. Mr. Shan has 19 years of solid banking experience with world-class international bank and development financial institution. He worked extensively in the areas of private banking, risk and compliance, AML, CDD, credit, regulatory risk, consumer banking, service quality, commodities research in oil, gold, agriculture, silver, and base metals, advising clients in Kuala Lumpur, Dubai, Singapore, Hong Kong, Shanghai, Lahore, Melbourne, and London. So, Mr. Shan Saeed, you are welcome. And today we want to interview you on several questions on the COVID-19 outbreak pandemic.
Thank you, Emmy, for having me in your show. I'm really honored. I must say that press and media in Malaysia, they have given me a lot of respect and recognition, and for that, I'm grateful. Emmy, you have asked me a very important question. Yes, COVID-19 is a wild card. 3 months back, nobody was talking about COVID-19, but it has made a huge impact across economies, across asset classes, and across industries. Yes, there are few economies that are going down, but there are few economies that have benefited from this chaotic and these uncertain times. I would say in advanced economies, yes, the growth rate will remain low or zero growth because there's a sentiment of fear among investors in advanced economies that is not helping the cause. If you look at other side of the continent, you have Asia, you have China, you have ASEAN, where the growth momentum is still very strong. The premise is very simple. You have young population, the demographics is strong, you have economic confidence, and the governments are in total control of the economy. And the governments have two policy levers, that is monetary policy and fiscal policy, and they have a lot of room to maneuver through those monetary policy and fiscal policy. Unfortunately, for advanced economies like Japan, US, Europe, they don't have policy levers because they have stretched their policy levers, especially monetary policy and fiscal policy, and they don't have much space to maneuver or to spur growth. This COVID-19 has made a huge impact, and I think at July IQI, we have already shared with our clients, the global economy will grow at 1 to 1.5% this year. It won't be growing at 2%. If somebody is telling you the global economy is growing 2%, that is the wrong information. According to our market intelligence report at the start of the year, we said that investors will lose $25 to $30 trillion of their wealth in one asset class, that is equities. As of now, that is 17th March, when I take this interview, investors have already lost $19 trillion. And we foresee more and more volatility, bloodbath, bedlam in the equity markets alone. But as you know, in all chaotic or uncertain or volatile or turbulent times, there are opportunities. So most of those sophisticated and smart and savvy investors who fathom history and economics, they have always taken position in two asset classes, that is real estate and in gold. And in these turbulent times, the only fixed asset that goes up is land, and IQI is dealing with land. So I think real estate, gold have become very significant asset classes, especially in tangible space. And the third asset class that has become very important is cash. Cash gives you economic and financial empowerment. If you pick up the 3 months back, Financial Times, they featured an article about Warren Buffett. Warren Buffett is holding $130 billion in his asset portfolio, cash alone. That gives a clear signal to other investors why a smart, big investor like Warren Buffett is holding $130 billion, because he can foresee a lot of opportunities in every asset classes. And in these turbulent times, all the asset classes will take valuation beating. So once the valuation goes down, you can enter into the market and you can buy something very cheap that was very high before the turbulence. So I think global economy will continue to stay volatile, but there are good opportunities, especially in Asia and ASEAN. And the good news is China will be back in the market by Q2, Q3. China is moving at a very fast pace. Mainstream media is not covering it because mainstream media has always been against China. They have been biased against China. But since IQI, we have got office in Shanghai. The market intelligence report that we are getting from Shanghai, the Chinese government and people are moving at a much faster pace. People are united. People are working hard to bring the economy back on track, and Chinese government look totally committed. The other good part is if you're part of Belt and Road, if you know Belt and Road has got three corridors: the northern, the central, and the southern corridor. The game is in the south, where you have countries like Malaysia, Indonesia, Philippines, Pakistan, Turkey, Sri Lanka, Djibouti, Russia, Mongolia. These are the countries that would tend to benefit once China comes back into the market, because China needs to import things. They need to export things. So obviously, they will export things and they will import things. So those countries that are part of Belt and Road, that are very relevant, and those who are not, they are irrelevant. So I think once you are part of Belt and Road, and as you know, Belt and Road is the biggest infrastructure project that China has undertaken. And Belt and Road has got infrastructure investment has direct correlation with GDP growth. So we at IQI, we still foresee a lot of opportunities, especially in real estate, gold, cash, and technology asset classes. We still foresee that oil and natural gas are still would go up in the next 6 months.